Small business accounts for 70% of private sector employment and makes up more than 99% of all businesses in Canada. In 2010, the government of the day released the Paperwork Study. The study looked at the paperwork costs borne by Canadian businesses in 2005, and then 3 years later in 2008. During that time, paperwork costs increased by 29% on average. These costs went up for all sizes of business, except the very largest. For our largest businesses, paperwork costs declined by 13%. The point is, for governments, bureaucrats, and our business schools, small business is almost invisible. They don't get it. At the Hatchery, we're all about small business. We train and support accounting technicians to help small businesses with their paperwork costs.
In this presentation, we'll take a quick look at the findings of the paperwork study. In this slide, we're shown the compliance costs as a function of business size. Note that costs are much higher for our smallest businesses, by a factor of 8 or 10 times. Also note that costs increased between 2005 and 2008. That was true, except for our largest businesses. Between 2005 and 2008, paperwork costs decreased by about 13% for our largest businesses. In this slide, we'll look at the most frequently outsourced regulatory compliance services. Note that income tax filings and related income statement compilation work are the most frequently outsourced services for companies of all sizes. This is followed by payroll T4 summary work. These two services are almost invariably outsourced to small or mid-sized accounting firms. In this slide, we see that the most profitable small firms paid less than $4,000 annually in labor costs. That compares with the largest 20 CPA firms that embrace the leverage model. On average, these large firms employ 8.4 CPAs per partner. Large firms rely on marking up labor costs by a factor of 10 or 11 times. The leverage model works well for partners, but not so well for staff or for clients. In this slide, we examine the numbers of CPAs working in industry as a function of business size. While it may not be surprising that small businesses can't afford to hire a CPA full-time, it is very surprising that less than half of our largest businesses have even one CPA on staff. In short, Canadian businesses outsource to CPAs. But most don't hire them as employees. In spite of this, our profession exhorts young people to become a CPA and be a recognized leader, exerting global influence.
The Hatchery was launched in 2022 to deliver practical training for students in the Business Analyst Technician program. Our students earn modest incomes working with Canada's smallest businesses and learning their trade. All students work under the supervision of our professional members. Together they deliver high-quality year-end accounting work, all at a reasonable cost. We developed our copyrighted Cloudware business system to ensure that your file is done professionally from beginning to end. After completion, your year-end file can be shared with a professional to file taxes and financial statements for your business.
At the Hatchery, we abandoned the leverage model, since it clearly doesn't work for small firms. However, the largest firms that dominate our profession still cling to it. Our profession launched the Advanced Certificate in Accounting and Finance in 2015, only to withdraw it in 2019. The new competency map was introduced in 2020, and the new compilation standards were introduced in 2021. In our view, the leverage model and all of these subsequent initiatives were misguided. In spite of this, Canadian small businesses overwhelmingly engage CPAs to help with tax and regulatory compliance. Our profession, like our bureaucrats and our business schools, has lost the plot. We know that there is a bright future for professional accountants in Canada. However, we need to get real about who we are and understand our market. This is what my parents' generation would describe as sticking to our knitting.